Why I am short MicroStrategy. MicroStrategy stupid strategy. So basically what MicroStrategy does as a company is they sell convertible debt to institutions, which allows the institutions to either buy the company's stock at a premium if the stock goes up, or be paid back in cash if the stock doesn't go up. But the problem with this is dilution dilutes shareholder value. When MicroStrategy issues convertible debt, it's essentially promising future shares to bondholders. If Bitcoin's price goes up, bondholders are incentivized to convert that debt into equity, increasing the total number of shares outstanding. This November, MicroStrategy sold $3 billion of convertible debt with a price of $672.4 a share. That means if MicroStrategy is above that price, on the expiration day in 2029, the debt holders will be paid back in shares, and the total number of shares outstanding will increase. Here's the catch: dilution. As more shares enter the market, your ownership in the company gets watered down. Even though MicroStrategy buys Bitcoin with the proceeds, the per share ownership of Bitcoin doesn't increase. It stays the same, or worse, can even drop depending on market conditions. For investors looking to gain Bitcoin exposure through MicroStrategy, this isn't a win. Why buy diluted exposure when you can just buy Bitcoin directly? So this shows what they're doing. They get shares issued through convertible debt, and they use that to buy Bitcoin. The share price goes up because the total amount of Bitcoin the company owns goes up, which means even more shares are sold as convertible debt at an even higher price. But the share of Bitcoin to per share stays the same or goes up very little compared to how much the stock price goes up. Eventually, Bitcoin can't go up forever. No matter how much of a Bitcoin bull you are, you have to admit Bitcoin is an asset that goes through cycles, and during a huge drop, MicroStrategy's over leverage, and if the stock or if the convertible debt expires and the stock isn't above a certain price, they're gonna have to pay that back in cash. They're a software company that doesn't make any money. Their only way to make cash is by selling their Bitcoin. This is gonna lead into a snowball, and I'll explain more about that here. So, poised for failure. I talked about the $3 billion worth of convertible debt they issued, but let's say that Bitcoin is experiencing a natural downturn like it did in 2019, 2023, and a lot of times before, where there's up to a 90% crash. So during that time, their value of their stock is going to be based pretty closely off the value of Bitcoin. Let's say it gets to 2029, Bitcoin's at $50,000 per Bitcoin, and their stock's still trading at the same premium it is today, like a 2.5 times premium, which means their shares would be going for about $300 each. That is lower than $657 that they are issued as convertible debt. So the company is forced to pay them back in cash. This means they have to sell their Bitcoin in order to pay their shares back, leading to a downward spiral where all the convertible debt that they issued has to be paid back in more and more cash. And as they issue the shares, convertible debt back as cash, they just have to sell more and more and more Bitcoin until it starts to actually have a big influence on Bitcoin's price due to all the selling they're doing. And at the same time, the sentiment in the company is failing because instead of the amount of Bitcoin the company holds going up, it's going down, and at the same time the price of Bitcoin is going down because of how much they're selling. So over leveraging and risk. As of December 6th, MicroStrategy holds approximately 400,000 Bitcoins. The company has approximately 197.27 million shares outstanding. So based on this math, you own 0.002 Bitcoins per share. Assuming the price of Bitcoin is around 98,000 as of the day of this recording, that means that it should be worth, if it's trading at a closer approximation to a 1-to-1 premium of Bitcoin to share, it should be trading at around $200 per share. And so with its current share price being 395, you can see how big of a premium this is. It's way too big. So MicroStrategy currently trades at a premium, with each share representing only 50% of its value in Bitcoin holdings. For this valuation to hold, Bitcoin would need to double price, which seems unlikely soon. If the share price drops to a fair valuation of 200, the company may need to settle its convertible debt in cash, forcing them to sell large amounts of Bitcoin. This could trigger a market imbalance, driving Bitcoin prices lower. Lower Bitcoin prices would reduce MicroStrategy's asset value, causing a feedback loop of falling Bitcoin prices and declining stock value. This scenario could spiral quickly, destabilizing both the company and the Bitcoin market. So here's a possible arbitrage idea. It can be very hard to predict when a bubble like MicroStrategy will pop. They're up 700% this year. It's really hard to time the top. So I would like to propose possible hedged arbitrage that could protect against a big move in MicroStrategy's price. So you're going to want to short MicroStrategy and at the same time buy far out of the money IBIT calls, the index that tracks Bitcoin directly, in a ratio of around 1 to 4 or 1 to 5 calls to shorts. I need to do more research on premiums to find the exact ratio. If Bitcoin remains stable, MicroStrategy's price could collapse, leading to profits on the short even if the calls expire worthless. If Bitcoin rallies significantly, like another 100 to 200%, the highly leveraged calls could offset the losses on the short and potentially generate additional gains. This strategy hedges against Bitcoin spikes while positioning for a correction in MSTR's overvaluation. And then if MSTR continues to rise while Bitcoin stays flat or drops, the short position could incur significant losses as the calls won't provide enough offset. However, this scenario seems unlikely given that it currently already trades at 200% of Bitcoin's actual price to the price Bitcoin represents, and it's pretty tracked to the price of Bitcoin. So as Bitcoin starts to rise or fall, it should be extremely leveraged in one direction or the other. Thank you for watching.